All right, let's dive in today, and we're going to explore how HDFC Bank built their unique business philosophy,
Mm.
especially in those really early days when it all began.
Okay.
We've got Tamal Bandyopadhyay's book, HDFC Bank, A Bank for the Buck, to guide us.
Yeah.
And it's just amazing. It's chock full of these insider perspectives and just like stories you just won't find anywhere else. So what we're really trying to understand here is like what made HDFC Bank different, right? Like what risks did they take? What risks did they avoid? And in the end, like what are the big lessons we can learn from their incredible success?
Yeah, and I think it's really important to remember that, HDFC Bank started back in 1994,
Hmm.
and that was a time of major change in India. Economic liberalization was starting to open up the markets.
Right.
But there was also like a ton of uncertainty.
It was a Wild West, kind of, huh?
Yeah, exactly.
For a new bank to come into.
Absolutely.
So let's talk about the team,
Right.
Because the book spends a lot of time on this. Like Deepak Parekh, he's the powerhouse behind HDFC, convinces Aditya Puri to leave this amazing job at Citibank,
Right.
to
Yeah.
lead this brand new venture. I mean, talk about a leap of faith for Puri.
Oh, totally. And it wasn't just Puri.
Oh, yeah.
The book goes into detail about how they got all this top talent, like Vinod, Harish, Shailendra, Luis, Samir. I mean, these guys were all pulled from well-established places. Can you imagine convincing these seasoned execs to jump ship to this, unknown thing? It's pretty wild.
It is.
They were basically betting on this vision of creating, a world-class Indian bank.
Yeah. And speaking of betting, the book mentions like how the HDFC board was kind of hesitant initially to use the HDFC name. Like they were actually worried about, what if this thing fails? What happens to our reputation?
That's such a good point.
Yeah.
It shows how important that legacy was, right? And the risk that came with using an already big brand name, I mean, it makes their success even more impressive.
Yeah, it really does. Now, I got to say, the book paints this fascinating picture of those early days, right? Like it wasn't your typical corporate banking scene.
Right.
They had like makeshift offices, training sessions under a people tree.
Wow.
They even had babies like on the trading floor. It sounds a little chaotic, to be honest.
Yeah, there was definitely this startup energy,
Yeah.
like a real sense of urgency and just camaraderie. Like Bandyopadhyay talks about how they celebrated hitting their 1,000th customer with tequila shots.
Wow.
So that's fun. But at the same time, alongside all this informality, there is this very strong focus on financial discipline, especially from Vinod, the CFO. He basically instilled this culture of cost control that became a real hallmark of HDFC Bank.
That's really interesting. So you're saying they had this blend of like this freewheeling, innovative spirit, but also this very grounded, fiscally responsible approach.
Exactly. And that's something that keeps coming up, especially in the chapters that really dive into their business philosophy. Chapters like business before the shop opens, doing ordinary things in extraordinary ways, the changing course, the entire pyramid. These chapters really get into what made HDFC Bank tick.
Okay, so tell me about these chapters. What is at the core of their business philosophy? And how was it different from other banks back then?
Well, it wasn't just about being different for the sake of being different. HDFC Bank was all about the fundamentals. They put a huge emphasis on building these really strong relationships with their customers, really understanding their needs and offering solutions that were tailored to them. And this customer-centric approach, it was woven into everything they did.
Okay, can you give me like a specific example of how that played out in their operations?
Sure. Take their early focus on corporate banking. They went after specifically AAA rated companies. Now, that might sound a little counterintuitive for a new bank that's trying to build a portfolio.
Right.
But it was a calculated move.
So what was the thinking behind that strategy?
Okay, so by focusing on these super creditworthy clients, HDFC Bank was basically minimizing their risk exposure, which was super crucial, especially in those uncertain times we were talking about.
Yeah.
But it also let them build this reputation for being reliable, for being prudent,
Yeah.
which ended up attracting even more top-tier clients.
So it was like a long-term play.
Exactly.
Like they were willing to maybe sacrifice some initial growth to really establish a solid foundation
Yeah.
and a brand that meant stability and trust.
Exactly. And they didn't stop at just providing the basic banking services.
Right.
They went above and beyond, offering things like cash management, supply chain management solutions.
Mm-hmm.
These kinds of value-added services really set them apart from other banks and made them like invaluable partners to their clients.
So it sounds like they were really focused on building these long-term relationships, like becoming a real part of their clients' businesses.
Absolutely. And that same commitment to understanding their clients' needs, that also drove their approach to technology too.
Right, right. The book talks a lot about how HDFC Bank was like an early adopter of technology, even when it wasn't, the norm.
Right.
Tell me more about that.
Well, they could have easily gone with the standard mainframe systems that like everybody else was using at the time.
Yeah.
But they didn't. They chose to go with a UNIX-based system, which was like super cutting edge back then. This gave them the flexibility, the agility to adapt quickly, which, as you can imagine, was like crucial in such a fast-changing market.
That's a bold choice, right? Especially for a new bank. Most of the established players were kind of hesitant to adopt this new technology.
And there's even this story about how they almost ended up using Citibank's marked banker system.
Oh.
Yeah, but then at the very last minute, Citibank pulls out of the deal. They realized, hold on a second. We might be creating a serious competitor here with HDFC Bank.
That's a pretty telling anecdote. It sounds like Citibank recognized that potential threat early on. So HDFC Bank clearly wasn't afraid to, break the mold and make these bold decisions, whether it was about technology or their client base.
Absolutely. And their approach to risk management, which was really embedded in their whole business philosophy, it just further solidified their reputation as this like really reliable and prudent institution. But we'll dive deeper into that in the next part of our deep dive.
So we were talking about HDFC Bank being such an early adopter of technology, right?
Right.
And how they were so laser focused on those high credit-worthy corporate clients. It really seemed like they were playing the long game from the very beginning.
Yeah, they were definitely. And this whole long-term vision thing, it keeps popping up, especially when they moved into retail banking. Remember, back then, that market was basically owned by these massive state-run banks.
Right.
With tons of branches everywhere.
It must have been so hard to break into that. I mean, how did HDFC Bank even begin to compete with those guys?
Well, they knew they couldn't just copy what the big players were doing.
Right.
They needed a totally different approach. And that's where their clever use of tech and data really comes in.
Yeah, the book mentions micro-marketing and data analytics. Can you break those down for us? Like, what do those even mean, and how did HDFC Bank use them?
So micro-marketing is basically all about like targeting specific groups of customers
Okay.
with products and services that are made just for them.
Okay.
It's about figuring out what different groups need and giving them exactly that. And data analytics, that's like the engine that makes it all happen. HDFC Bank used all this customer data to spot patterns like what people preferred, what they needed, and then they could create super targeted marketing campaigns and products.
So instead of this like one-size-fits-all approach, they were being much more strategic.
Yeah, exactly.
More precise in their efforts.
Totally. And this whole data-driven approach also played a huge role in their cross-selling efforts too. So they look at what financial stuff their customers were already doing with the bank.
Right.
And then, bam, they'd spot chances to offer them other products or services that fit their changing needs.
So it sounds like we weren't just using data to get new customers, but also to really strengthen the relationships they already have.
That's it. It was about building long-term value, not just quick wins. And this commitment to really understanding their customers, it went beyond just the corporate world and the wealthy folks.
Oh, yeah?
HDFC Bank also did a lot for financial inclusion.
Right. The book talks about their work with those self-help groups and rural communities. What can you tell us about that?
Well, they recognized that a huge chunk of people in India were being left out by the traditional banking system, So they made a real effort to reach these communities.
Yeah.
Offering things like microloans and programs to help people make a living, bringing financial services to those who were basically excluded before.
It's pretty cool that they saw this as a business opportunity, not just some kind of social responsibility thing.
Totally. By empowering these communities, they weren't just like doing good.
Right.
They were also expanding their market, creating a whole new group of customers.
Now let's shift gears a bit and talk about risk management. I mean, every business has to deal with risks, right? But HDFC Bank seems to have this like stellar reputation for handling them well. What's their secret sauce?
Well, Bandyopadhyay really stresses their cautious and disciplined approach.
Yeah.
They were never the type to gamble, you know? They really looked at every opportunity carefully.
Mm-hmm.
They spread their bets, so to speak, by diversifying their portfolio. And get this, they were willing to walk away from deals that didn't fit their risk appetite.
Really?
Yeah, like they were okay with missing out on some potential profits to make sure the bank stayed stable in the long run.
So it was a culture of being prudent, not just chasing after every shiny new thing that popped up.
That's it. And this approach really paid off, especially during crazy times like the 2008 financial crisis.
But wasn't HDFC Bank involved in some controversy back then? Like with those complicated derivative products?
Yeah, the book does touch on that.
Oh, okay.
There were people saying that HDFC Bank, along with other institutions, basically missold these products to companies who didn't really get the risks.
And those were some pretty complex financial instruments,
Yeah,
right?
they were.
I mean, a lot of experts blame them for making the crisis even worse. So how did HDFC Bank deal with those accusations?
Well, Bandyopadhyay presents both sides, you know?
Yeah.
He lays out the criticisms, but also HDFC Bank's defense. They said they were only taking on credit risk, not market risk,
Mm-hmm.
and that the losses were made way bigger because of all the panic and fear in the market at the time.
So it was like a really messy situation with no easy answers.
Exactly. It reminds us that even the most successful businesses can run into unexpected problems and scrutiny.
Now, we can't talk about HDFC Bank without talking about Aditya Puri, right?
Right.
He was their CEO for ages. He seems like he was crucial to shaping their culture and their success.
No question about it. The book spends a good chunk of time on Puri's leadership style,
Mm-hmm.
which was really key in guiding HDFC Bank through those early years.
So what were some of the things that made his leadership so special?
Well, Bandyopadhyay describes him as a leader who really valued relationships and trust.
Okay.
But he was also super demanding when it came to performance. He was very hands-on, hated bureaucracy, and really gave his team the power to take ownership.
Interesting.
He wasn't afraid to challenge the way things were usually done or to push his people to be the best.
Sounds like he created this culture of accountability and a drive to excel.
Totally. And he wasn't too proud to learn from other people's mistakes either.
Yeah.
There's this famous quote of his where he says he'd rather be the best, not necessarily the first.
That's pretty interesting. It suggests he was more about observing, analyzing, refining, not just jumping on every trend that came along.
And that careful, strategic approach shows up in their growth strategy too, especially with mergers and acquisitions.
Right. The book mentions two big ones.
Mm-hmm.
The Times Bank acquisition in 2000 and then Centurion Bank of Punjab in 2008.
Mm.
How did those deals help HDFC Bank grow?
Well, they were both really thought-out moves, you know, aligned with their overall goals. The Times Bank deal expanded their network.
Okay.
And then Centurion Bank of Punjab brought in new types of customers, especially in North India.
But mergers can be such headaches, right?
Oh, yeah.
Did they run into any major problems when they were bringing these new entities in?
Bandyopadhyay is honest about the challenges, you know. He talks about the difficulties they faced, especially with Centurion Bank of Punjab, which was a much bigger and more complicated operation than Times Bank. Combining different systems, cultures, processes, it's never a walk in the park.
Yeah.
It took a ton of effort and expertise to make it all go smoothly.
It reminds us that growth, even when it's strategic, always comes with its own hurdles.
For sure. But HDFC Bank's ability to handle those challenges shows how adaptable they were and how committed they were to getting things done.
One thing that really struck me while I was reading the book was how the HDFC brand itself changed over time. At first, there was this worry that the bank might actually hurt the parent company's reputation.
Yeah.
Right? Yeah, that's a really interesting part of their story. People were afraid that if the bank flopped, it would damage the legacy and the trust that HDFC had built up over so many years. But it seems like the opposite happened.
So how did the relationship between the bank and the parent company change as time went on?
Well, as HDFC Bank got bigger and built its own reputation for being awesome, it actually ended up making the HDFC brand even stronger.
It became this positive feedback loop where both sides were benefiting from each other's success.
So what started as a potential liability actually turned into a valuable asset, right?
Exactly.
And it made the whole brand even more solid.
Exactly. And this close relationship raises some interesting questions about what's next for the HDFC group, you know?
Yeah.
Bandyopadhyay talks about the possibility of more mergers within the group and maybe even setting up a holding company structure.
So even after all this incredible success, It sounds like the HDFC Bank story is still unfolding.
For sure. And as we wrap up this part of our deep dive, it's worth thinking about what lessons we can learn from HDFC Bank's journey. I mean, it's proof that having a vision, making smart decisions, and really focusing on execution can get you a long way.
Yeah, it shows how important it is to build a strong culture, too. One that values both being innovative and being careful. They somehow made this environment where people could be creative and take risks, but still be super disciplined about money and growing responsibly.
Yeah. And maybe the biggest takeaway is that being successful is often about doing the simple things really, really well.
Yeah.
HDFC Bank didn't rely on flashy gimmicks or quick fixes. They focused on the basics, understanding their customers, managing risk, building solid relationships, and just delivering amazing service.
All right, welcome back to the final part of our deep dive into HDFC Bank. It's been quite a journey, hasn't it?
It has.
We've talked about their unusual start, their commitment to putting the customer first, how they use tech so effectively, and their careful approach to managing risk. So as we wrap things up, what really stands out to you about their business philosophy? What makes it so unique? And what lessons can we take away from their success?
You know, it's amazing how HDFC Bank brought together these seemingly opposite ideas into a strategy that really worked.
Yeah.
Like on one hand, they were all about innovation. They weren't scared to shake things up. Like remember how early they embraced technology and that kind of non-traditional corporate culture they had?
Right.
But then at the same time, they were super dedicated to financial discipline, managing risk, and building for the long haul. Like think about how they targeted those really credit-worthy clients and how measured they were about growth.
So they kind of found this balance between like being agile and being cautious.
Yeah, exactly.
Which let them navigate this rapidly changing market while still staying stable and trustworthy.
That's it. And those chapters you mentioned earlier, like business before the shop opens, doing ordinary things in extraordinary ways, the change in course, the entire pyramid, they really show that unique approach. It wasn't enough for them to just be another bank. They wanted to redefine what banking meant.
Okay, can you give us an example of how they redefined banking?
Well, look at how they developed products.
Yeah.
They weren't just pushing stuff out there for no reason.
Right.
They were laser focused on understanding what their customers actually needed, finding the holes in the market, and then creating things that actually filled those holes.
So it was about being customer-centric, but in a real, genuine way.
Totally. And this whole customer focus went beyond just the basic banking stuff. They understood that it was important to build this whole ecosystem that could meet all sorts of financial needs. That's why they went into insurance, asset management, even credit cards. They wanted to create a smooth, comprehensive experience for their customers.
So it sounds like they were always looking for new ways to add value and build those deeper, more meaningful relationships.
Absolutely. And they weren't afraid to change and adapt either. Like, remember how they shifted from focusing on corporate banking to retail banking?
Yeah.
They saw the huge potential there and they went for it. They were always ready for new challenges and opportunities, and they always brought that same customer-centric approach with them.
And even though they had some bumps along the way, like that whole derivatives thing during the 2008 crisis, their core values of being careful and managing risk seemed to help them get through those rough patches.
You're right. That conservative approach, their willingness to walk away from risky stuff, and their focus on building a strong capital base that gave them a cushion when things got shaky, it shows that even in a market that's constantly changing and unpredictable, sticking to sound principles can make a huge difference.
So for our listener, what are the big takeaways from our look at HDFC Bank?
Well, I think there are a few important lessons here no matter what industry you're in.
Okay.
First, it shows what can happen when you have a clear vision and you're relentless about making it a reality. HDFC Bank knew exactly what they wanted from the start, to build an Indian bank that was world-class, that could compete globally. And they went after that goal with like this incredible determination, discipline, and a commitment to being the best.
It also shows how crucial it is to build a strong culture.
Absolutely.
One that values both innovation and being sensible. They created an environment where people could be creative and take risks, but they also knew how to be financially responsible and grow in a sustainable way.
And, you know, maybe the most important thing is that success is often about doing the basic stuff really, really well.
Yeah.
HDFC Bank didn't rely on tricks or shortcuts. They focused on the fundamentals. understanding their customers, managing risk, building solid relationships, and just providing amazing service.
And by doing all that, they created an institution that's not only super successful financially, but has also made a real difference in India's economy and society.
Exactly. Their story is like this inspiring example of what's possible when you have vision, determination, and a commitment to doing things the right way.
Well, it's been a fascinating journey exploring HDFC Bank. Thanks for sharing your insights and guiding us through this deep dive.
It's been my pleasure.
And to our listener, we hope you've gotten some valuable insights into the thinking and strategies that made HDFC Bank such a success. Remember, even the biggest goals are achievable when you have a clear vision, a commitment to being excellent, and a focus on the fundamentals. Until next time, keep exploring, keep learning, and keep diving deep.